What's up, everybody? Today we're going to take a look at Redfin's latest housing market update, as well as Corelogic's latest housing market predictions as of today in April of 2022. I think it's important to look at these housing market predictions and updates so you can make the best decision for you and your family if you want to buy now or if you want to wait. So let's just dive right in. This report came out on April 14th of 2022 with the headline, "Demand Slips, Pushing More Sellers to Drop Asking Prices." This clearly states that demand is softening, typically at a time of the year where it springs up. According to Daryl Fairweather, Redfin's chief economist, there is really a limit to homebuyers' demand, even though the market over the past few years has made it seem endless. She goes on to say the sharp increase in mortgage rates is pushing more homebuyers out of the market, but it also appears to be discouraging some homeowners from selling. So Redfin bases their opinions on several factors. The first one, and they look at Google Trends. So far they found for this week in April that Google shows that fewer people are searching for homes for sale on Google. This has gone down 3% from last year. Another thing they look at is the amount of showings requested and other buyer services from Redfin agents, and that has also gone down 3% in the last few weeks, compared to a 5% increase from this time last year. They also noticed that mortgage purchase applications are down 6% from this time last year, but that could be because rates are the highest they've been since 2011. So keeping that in mind, let's take a look at the key market takeaways for the over 400 US metro areas. The data covers a 4-week period ending on April 10th. The median home sales price was up 17% year over year to a record high of approximately $398,000. Keep in mind, these dates are about 30 days behind because the data is based on when a house goes under contract, and it takes about 30 days to go from contract to close. The median asking price of newly listed homes increased to 14% year over year to approximately $397,747. The monthly mortgage payment on the median asking price home rose to a record high of $2,288 of the current 5% mortgage rate. This was up 35% from a year earlier when mortgage rates were 3.04%. Pending home sales were up 1% year over year with less inventory. New listings of home for sale were down 7% from a year earlier, the 21st straight annual decline. Active listings, the number of homes that were listed for sale at any given period, were down 23% year over year. 58% of the homes went under contract within the first 2 weeks, which is an all-time high. This is up from 55% a year earlier. And 44% of the homes that were listed went under contract within 1 week, an all-time high. This is up from 41% this time last year. 54% of the homes sold for above list price, up from 42% a year earlier, and just shy of the all-time high seen in July of 2021. And this one I think you guys are going to find the most interesting. Redfin says that on average, 3.2% of homes for sale each week had a price drop, with 13% dropping their price in the past 4 weeks. That's up from 10% a month earlier and 9% a year ago. The share of listings with price drops is climbing faster during this time of year than they have since at least 2015. Typically during this time of year, the share of homes with price drops is slightly down month over month. The average sale to list price ratio, which measures how close homes are selling to their asking prices, rose to an all-time high of 102.4%. In other words, the average home sold for 2.4% above its asking price. This is up from 100.4% in 2021. In other words, the house sold for 2.4% above the asking price. Redfin shows us some graphs, of which this one I find particularly interesting, especially for people that keep saying the market's gonna crash. So take a look at this graph. In order for the market to crash and prices to go down, we need much more inventory. You can see from the graph that inventory is still down from last year. The red line is today in 2022, and the blue line is 2021. The gray line is 2020, but we really can't look at that as far as this time in 2020 because we were still shut down, and of course the inventory had dropped. The other graphs show more of what's happening now in the current market of April in 2022. You can see the median sales price is up 16.7% from last year. Especially since February, the prices have gone way up. This is pretty normal, at least where I am in DC and Maryland, because the spring market is always higher than the winter markets. You can see in 2021, it was the same thing. Once again, we can't really pay attention to 2020 because we were shut down. You can see in this next graph, the median asking price is up 13.7% year over year. This will be interesting to see if this line continues to go up as interest rates are going up, and we think we're going to see a softening of the market. Because some sellers are pricing their homes at the highest price where other buyers had escalated to the previous comp. And honestly, I think it's kind of, strange to look at the asking prices in this particular market in the spring of 2022, because some sellers are going with the latest escalated price of the last comp and pricing their houses there. And other sellers are pricing their house what it would be in a normal market, which is what I believe you should do, and let the buyers escalate it to the price they want to pay. So the asking price is not, to me, the greatest indication of what's happening in our current market, because there are so many mixed messages out there. This next graph shows how much higher the monthly mortgage payments are now in 2022 compared to this time last year. But come on, interest rates have gone up a lot since April of 2021, so I think that that's pretty normal. But the next graph I think is really interesting, because Redfin shows that the pending home sales are up 0.7%, so basically even up a little bit since this time last year, but the inventory is much lower. So let's take a look at the active listings. In this chart, it shows quite clearly the active listings now in April of 2022 is down 23% from this time last year. Because we've spoken about this in previous videos, it is all about supply and demand. And if the supply is going down and the demand is still high, the market is just not going to crash. We may see some price adjustments because interest rates are going up, but I still don't see a crash. But hey, let's look at some other statistics. So one indicator that we can clearly see is if the market is slowing down is how long houses are taking to sell, like how long they've been on the market, and what is the differential in price. So let's take a look. According to Redfin, 44% of the homes went under contract within 1 week. This is, as you can see, up from this time last year. 58% of the homes went under contract within 2 weeks, also up from last year. But if you look at these graphs and you look at the red line, it does look like it's starting to plateau off. I guess only time will tell. I would say here in the DC, Maryland market, if houses are priced right and in good condition, they sell in about 5 days. But the next graph is probably the most interesting of an indicator of what the future of the market holds. On average, 3% of listings had price drops or price reductions. This means that the sellers overpriced the house, even in this crazy seller's market, and had to reduce their price before they could get an offer on their house. You can see that this number has gone up since March, so it'll be very indicative of what happens for the future if this number continues to go up. Mind you, 3% is not a lot, so don't get too excited if you're a buyer. But also keep in mind, these statistics are most likely 30 days behind because they're all based on when a buyer writes the offer and it's accepted, not on when the house closes, which is usually 30 days later. So we'll see when we come up with the next market update if these numbers have increased, will be reflective of what's happening right now in April of 2022. And you can see this time last year, it was just around 2%. So even less houses had price reductions than they do right now. And lastly, Redfin shows that the average home sold for 102.4% of the list price. This is no surprise to us. We've all seen how much the prices have escalated over the asking price. Here in the DC, Maryland area, it's gone way more than 2.4% above the asking price. Now let's take a look at Corelogic's latest report, which was posted April 5th, 2022, which shows their home price insights from February 2022 up to their forecast of February 2023. The Corelogic's HPI, or Home Price Insights, is designed to provide an early indication of home pricing trends. So when looking at February of 2022, home prices nationwide, including distressed sales, increased year over year by 20% in February 2022 compared with February of 2021. On a month-over-month basis, home prices increased by 2.2% in February of 2022 compared to January of 2022, which is a lot. So if I'm doing the math correctly, and I may not be, and also considering the spring market is always much stronger than the winter market, that could end up being around 25% of price appreciation by the end of 2022? Really? But alas, no, Corelogic does not predict an increase of 25% by the end of the year. In fact, the Corelogic HPI forecast indicates that home prices will increase on a month-over-month basis by 0.6% from February 2022 to March 2022, and on a year-over-year basis by 5% from February 2022 to February 2023. But this is really important because this is more bullish than their previous forecast. The last forecast predicted a 3.8% increase, and the one right before that predicted a 3.5% increase. So 5% is a lot more when we all are starting to think the market is slowing down. And it 100 million% contradicts those who are predicting a market crash in 2022. Just doesn't make sense. Dr. Frank Nothas, the chief economist for Corelogic, states, new listings have not been kept up with the large number of families looking to buy, leading homes selling quickly and often above list price. This imbalance between an insufficient number of owners looking to sell relative to buyers searching for a home has led to the record appreciation of the past 12 months. Higher prices and mortgage rates erode buyer affordability and should dampen demand in the coming months, leading to a moderation in price growth in our forecast. So he's saying he's seeing prices come down in the future, and yet the market forecast for this month is higher at 5% than the previous two of 3.8 and 3%. So I'm going to be very interested, and I'll definitely report back what the future forecasts are going to tell us. Corelogic does cite specific areas in the United States that have certain price appreciation or price reduction. So let's take a quick look. Nationally, home prices increased about 20% since last February, but these states have the highest increases year over year. No states showed a price depreciation in the past 12 months, just FYI. So Florida is the highest in appreciation with 29%. And you can take a look at the top 10 according to Corelogic. And to be even more specific, these cities have shown a price increase as of February 2022, with Phoenix on top at 30.4% year over year. And according to Corelogic, the following markets are the markets that are at most risk for price decline. Cities in Arizona take the top 2 spots, followed by Connecticut and Hawaii to round up the top 5. If you live in any of these areas that I've spoken about, definitely comment below so you can hear firsthand what's happening in your market. To sum it up, Corelogic says that buyers outnumbering sellers and a record low number of houses for sale remain the primary culprit for the rapid price gains. The Corelogic HPI forecast shows a national year-over-year appreciation slowing to 5% by February 2023 as rising interest rates are expected to sideline some buyers and just make it simply unaffordable for them to compete in this market. Redfin says that even with demand and supply both slipping, the market isn't likely to flip from a seller's market to a buyer's market anytime soon, according to Daryl Fairweather. Despite these early signs that the market is slowing, it still feels as hot as ever for home buyers with new records set for home selling speeds and price escalations based on data going back to 2015. So what are your thoughts? Do you think the market's slowing down? Do you think it's going to crash in 2022? Or do you think it's going to continue to go up well into 2023? I want to know. Because let's be clear, none of us have a crystal ball, which is why I like to give you the most relevant information available so we can all talk about it and think about it and try to predict what's going to happen in the future in the housing market in our country. If you do get value out of these videos, please consider smashing that like button, subscribing, and sharing it with a friend. It helps YouTube with the algorithm, which motivates us to do more videos, and I do appreciate it. Thanks for watching. Bye!